there, good evening, and welcome to the weekly episode of the market review with the bottom line. Again, we'll go with the existing same pattern with a slight change, just speaking a little bit about what happened in the macroeconomic world. Then we'll follow up with the main indices, including the bond yields and some aggressive sectors versus the defensive sectors and where we are in terms of structure. So in terms of macroeconomics, I think there has been a clear signal from the Reserve Bank that there is no intent to provide any kind of rate cut at this point, and this is likely to continue. We have inflation numbers coming in for CPI tomorrow, 12th of August, and that will also define what will be the direction for the next Reserve Bank policy. But as of now, it looks really tough in terms of providing any rate cuts. Thus, thus there is an expectation on the inflation also not going to nudge anytime soon. So the growth rate continues to be sticky, and we are not going to find any big growth spurts at this point in terms of the macroeconomic situation. As I've said earlier, that the financial markets are not in alignment with what is happening on the macroeconomic indicators. There is a significant amount of deviation, and that deviation today or tomorrow will be neutralized in terms of an event, in terms of a global meltdown, in terms of any global index falling. It can be any trigger for a sell-off. The smallest of the triggers are more than enough to bring the markets to a more corrective levels. In terms of the indices, as I've said earlier, Nifty is in a structure of indecisive to bearish. Very soon I do see Nifty becoming bearish on daily, but I do want to wait for the charts to provide that signal. Sensex is also in the same zone, indecisive to bearish. In terms of the 10-year bond yields, the bond yields have continued to lower for almost 2 months now, and previous week also closed in a negative bond yield, indicating that the bond markets are getting money. Now, where that money is coming out from, equity or is it coming out from commodities, is not known. But right now what we see is both the equities and the bond markets both have continued to get funds, and at one point either of them will give up, which I see the chances of more are the equity market to give up and come into a correction phase. If we look at some of the high beta sectors, which is Bank Nifty is clearly in a daily bearish zone. Until 52340 is broken, we cannot call it in a daily bullish zone. On a weekly time frame, yes, we are bullish, but on a daily time frame, we are on a correcting mode. The same is happening in CNX Finance. If you see, the earlier point that I had marked was here at 23,838, but now the CNX Finance market structure change has shifted to 23,668, and this will keep happening every time it makes a lower low. Auto was earlier not aligning with Nifty, but now we are seeing auto also going into a phase of bearish or indecisiveness. If you look at public sector entities, they are still leading in terms of Nifty. They are bullish on the structure. The structure low remains at 10,441. Metals, as I said, metals and energy were metals and realty rather were lagging in the past video also when we discussed about it, but metals have dropped significantly with Nifty dropping. Energy is still in the bullish structure. This is the only high beta sector now which remains in the bullish structure. According to me, everyone else has gone into a corrective phase, either in indecisive or either in fully bearish mode. If we look at realty, it was somewhere here. When Nifty dropped, it has dropped severely from where it was earlier. The PSU banking remains a laggard, so now the next drop that will come in banking would likely to put the PSU banking sector also in a bearish and indecisive phase. CNX Infra continues to be bullish. CNX FMCG continues to be bullish. The IT sector has now gone into a structure of bearishness. If we see, there was this low which it was targeting, and that has now moved and that has now been broken. So on daily, Nifty IT, which is also one of the defensives, has gone into a structure of bearishness or indecisiveness. CNX Pharma continues to be a bullish structure. So broadly, if you see, except the energy sector, to a certain extent FMCG and infra, we are not seeing any other sectors to be in a bullish structure. So when the defensives try to move the market, they are not going to be able to take the market very high at any point in time. If the high beta sectors are more in support, you will see the financial markets moving slightly better in terms of growth. So keep looking for the macroeconomic indicators that are not in sync. I think that's where the point lies as of now. So it will only take a couple of triggers to bring in a correction of 10-15% easily. I'm again, like I said, this is not a prediction. This is what I see happening in the market. If that happens, keep your funds ready. See if you find some really good stocks, really good equity opportunities, and that would be a good position to get into for a slightly long-term horizon. Inflation numbers expected tomorrow, but I'll cover that separately in next week or in a shorter video on our Instagram channel. But apart from that, the markets do look slight worry in terms of the technical market structures, although I see everyone bullish around, so I'm not going to comment on who should be bullish and who should not be. I think time will tell on what is happening in terms of correction, what is happening in terms of price. Until I see you next time, I wish you good luck and good investing. Bye bye.